pre-market report video for 30th December 2022 in terms of Nifty and Bank Nifty. Just for info, today is the last trading day for this calendar year 2022. Anyway, let's get into the topic. Last night, before the US market opening, there were three things that set the tone. First, US initial jobless claims macro data. US Department of Labor released the data about the number of individuals who filed for unemployment insurance for the first time during the past week. Every week, most of the time, this data will have an impact on stock market since this is a kind of earliest indication of US economy. The data comes as 2,25,000 number and it is higher compared to that of the last week, and it is in line with the market forecast. As I said in my lot of pre-market videos, at present, bad economic data is good for the stock market. So this first news is very positive. Then the second one, day before yesterday, the negativity in US market was mainly started by the worries of iPhone supply in the first quarter. Now, last night, Wall Street Journal released the article that Apple iPhone production in China is catching up the demand. So basically, what mentioned in that article was, despite the surge in case, the production begins to catch up the demand. And the present situation in Foxconn plant is far better than that of the previous class situation during last September. Because of this news, it made Apple stock to increase over 3%. Then the third one is regarding Tesla. Again, before the market has, Morgan Stanley recommended their investors to buy on dip in Tesla stock. Actually, they cut the price target from $330 per share to $250 per share, but still at present, the share is trading around $110 to $125 per share. So they said that they expect the share to increase over 130% from the present price level. This made the Tesla stock to increase over 8%. I hope you guys remember, because of this $7,500 offer on Model 3 car in US, 2 days back, on Tuesday night, Tesla shares dropped over 11%. Day before yesterday, it gained 3% and last night it gained another 8%. So basically, it recovered all its losses. These three created the bargain hunting in whole US market. As I explained in yesterday's pre-market video, like who dropped and how much this year, etc. I don't want to repeat the same information and bore you guys. Even myself seriously considered to invest in either Google or Apple. For example, I hope you guys agree with me. At present and to my foreseeable vision, there is no alternative for Google in their respective field. They are clear and very dominant monopoly, even though at present Google stock is trading at near 17 PE ratio. That much cheap the tech stocks in US are trading at present. So basically, bargain hunting made the US market to close super duper positive. Dow Jones increased by 1.05%, S&P 500 up by 1.75% and Nasdaq rallied over 2.5%. Finally, US VIX crashed 3%. Then regarding tech stocks, most of them increased from 2 to 4%, with Tesla rallied over 8% and Netflix increased over 5%. About 10-year Treasury bond yield, as expected, it dropped over 1.5% to 3.82%. Oil and dollar index were roughly the same as day before yesterday. Brent crude oil was traded at $83.7 per barrel and WTI crude oil was traded at $78.5 per barrel. Coming to Indian areas in US market, it's too very positive. Both the IT stocks increased over 1.5% and banks increased over 1%. Regarding SGX Nifty at 3 am Indian Standard Time, for January month expiry, it closed at 18,374. At present, there is a premium of 90 to 100 points, so it's kind of indicating 70 to 80 points gap up opening. So this is what happened last night in global market. Now coming to India related, mostly regarding RBI. Yesterday in the aftermarket hours, RBI released their 26th financial stability report regarding India. And also they released the very important bunch of macros such as current account deficit, balance of payments, money supply and trade balance. As per schedule, those macros are supposed to release today in the aftermarket hours, but they did release it along with the financial stability report. Anyway, now about the financial report. If anyone fancy reading it completely, please have a look at the description below. I'll provide the link to it. Regarding the content summary, mostly it's very good. I mean, they mentioned that global economy is facing the recession issue, and despite that, Indian economy is doing great. Because of this strong credit, investment cycle and its capital expenditure in the country is reviving. The report also states that Indian commercial banks are very capable and scored higher points not just in baseline and medium stress scenario, they also scored higher points in more severe stress scenario as well. And finally, the report pointed that gross NPA fell to a 7-year low of 5% and net NPA dropped to 10-year low of 1.3% in September 2022. This entire report itself is a very positive one for Indian banking stocks. What's not so positive was current account deficit data. This is a very serious issue. India's current account deficit increased to all-time high of near 37 billion US dollars, which is 4.4% of GDP in September quarter. I know today's early market indication is very positive, but for sure government has to do something here. Since one more quarter of current account deficit with a similar magnitude can hurt the economy and stock market severely like it did in 2013. Honestly, this one data and this one number really making me worry whether this all free trade agreements, is it helping India or hurting India? Anyway, the third item I like to highlight is regarding Indian government. They requested pharma companies to ensure that they have adequate drug stocks just in case if India faces the similar situation as in China. As a summary, US market closed really positive. SGX Nifty is indicating positive gap up opening of over 70 points. This RBI stability report is very positive for banking stocks. Even this bad current account deficit number is good for Indian IT stocks. Since bad current account deficit can hurt Indian rupee value, devaluing rupee is always positive for IT stocks. It's just my opinion. Today, just stay away from pharma stocks since too much of international bureaucracy is going on. I mean in US and in other countries as well. So it's hard for me to judge which one is affected and which one is not. Coming to technical, on daily chart in both Nifty and Bank Nifty, if we compare the last 2 days, it forms the bullish engulfing pattern. This is the very popular and widely considered bullish candle. And also in the last 3 straight sessions, 18,100 was defended every time. Even in terms of RSI from 32, which was 3 days ago, a sell indicator, now it improved to 47, which is a neutral indication with upward direction. So it's indicating the continuation of bullishness. Then about the moving averages for Nifty compared to yesterday, additionally it passes above the 10-day simple moving average. Because of that, now 7 moving averages are indicating buy signal and 5 moving averages are indicating the sell signal. So as a summary, it's marginal buy. However, in case of technical indicator summary, it's still same as last 3 sessions, which is a strong sell. Then coming to Bank Nifty, compared to yesterday, now it crosses above 10 and 20-day moving averages. So at present, all 12 moving averages are indicating the buy signal. So as a summary, it's a strong buy. Regarding technical indicators, there are some indicators now turns to buy. For example, yesterday RSI value is 50, but now it increased to 55.5 and thus it turns from neutral to buy. However, there are still some indicators like Williams and Rock were either in overbought or sell region. Thus, as a summary, it's just buy, not a strong buy. Since yesterday was the options weekly expiry, I don't see any point in analyzing the options open interest. So from pivot chart for Nifty, at present the immediate support is present at around 18,050 and strong support is at 17,900. On the higher side, the resistance to break is at 18,375. Then in terms of Bank Nifty, the support is present at around 42,700, whereas the immediate resistance is at 43,700 and significant resistance is at 44,090. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the videos. It will help me beat the YouTube algorithm and it will also motivate me to do more. Please don't make any investment decision based on this as I'm not a SEBI registered advisor. I'm doing it for my and viewers' educational purpose only. Thanks for watching.